Unlock wealth with these 20 rules of money. The importance of understanding money. In your lifetime, you will have handled a significant amount of money. Whether it's $493,000, $1.9 million, or $6.3 million, the question remains, how much of that is left in your wallet? Many people fail to understand how money works and, as a result, they find themselves broke despite having earned substantial amounts over the years. This discrepancy arises from not knowing how to play the money game. This video breaks down the rules of money and how you can better position yourself for financial success. Footnote: the primary reason people struggle with money is a lack of understanding of how financial systems and principles work. Rule 1: Money is a game. The first rule of money is simple: it's a game. Just like any other game, the more you play, the better you get at it. People often think that those who become wealthy are just naturally gifted or lucky. In reality, they have learned how to play the game of money. The game is about practice, discipline, and learning the rules over time. If you've never played chess, and someone who has played 100 times competes against you, they're likely to win. The same principle applies to money: it can be learned and mastered. Footnote: success in money management comes from understanding and mastering the game, not from innate ability or luck. Rule 2: don't hate money. Rule number 2 is not to hate money. Money is attracted to those who don't hate it. If you constantly view money negatively, you will struggle to make it. Saying things like money doesn't grow on trees or rich people are greedy only repels money. Instead, you must change your mindset and embrace money. Much like how someone would approach a person they admire, money responds to those who appreciate and respect it. Footnote: a negative attitude towards money blocks its flow and prevents financial success. Rule 3: the doubles game. Money is a doubles game. What does this mean? If you have $1,000, you are just 10 doubles away from $1 million. Every time you double your money, the growth multiplies. Understanding the concept of doubling your money can significantly impact how you view your financial future. It's about time and risk tolerance. For example, if you want $1 million in 10 years, you'll need to calculate how many doubles it takes to get there. The game of money is about accelerating that process through wise investments. Footnote: the concept of doubling money is central to wealth accumulation, relying on time, risk tolerance, and smart financial decisions. Rule 4: seduction. Money needs to be seduced, not chased. Desperation repels money, just as desperation can push people away. To attract money, you must have a disciplined, strategic approach, much like seducing someone who is already attracted to you. Money is attracted to those who know what they're doing. Investors who understand the rules of the financial game don't chase after money, they let it come to them by building a reputation for smart investments. Footnote: the key to attracting money lies in strategic, disciplined actions, not in desperation or impulsiveness. Rule 5: timing. Timing is a critical element in financial decision-making. Whether it's knowing when to cut costs, expand your business, or double down on investments, timing can make the difference between success and failure. Strategic timing is not just about reacting to market conditions, it's about anticipating changes and positioning yourself accordingly. Whether in business or investment, knowing when to act and when to hold back is crucial. Footnote: proper timing in business and investment decisions plays a vital role in financial success. Rule 6: avoid boredom. Money needs to be moved. Just like a person can lose interest in someone who is boring, money will go to those who know how to use it effectively. Leaving money idle in an account is a missed opportunity. You should always ensure your money is working for you, investing, growing, and creating more opportunities. This principle is essential for building wealth, as stagnation leads to missed financial growth. Footnote: money should never remain stagnant, it must be actively working to increase your wealth. Rule 7. The secret account. Having a secret account is crucial. This is an account that no one knows about, not your family, friends, or business partners. It's your crisis account, the one you turn to in difficult times. While it's not an emergency fund, it serves as a safeguard when financial storms arise. In the past, this account saved businesses from going under. You must have an account that no one else knows about for your financial peace of mind. Footnote: a secret crisis account is essential for weathering financial difficulties without revealing your financial strategy to others. Rule 8. Don't fly first class. Rule number 8 advises against flying first class unless you have a substantial amount of wealth. The key is not to waste money on luxuries until you've achieved financial security. Spending on high-end items before reaching your financial goals is counterproductive. Instead, focus on using your money wisely to grow your wealth before indulging in luxuries. Footnote: prioritize wealth-building strategies over unnecessary luxuries until your financial goals are met. Rule 9. Comp plan. Your compensation plan, or comp plan, is critical to your financial success. It's not just about your job, it's about understanding how your income is taxed and how you can optimize it. Business owners often benefit from tax incentives, which is why entrepreneurship is an excellent route for wealth building. Understanding how to leverage your compensation structure can significantly affect your financial future. Footnote: the structure of your income and taxes plays a pivotal role in your wealth building process, especially for business owners. Rule 10. End of the world mentality. In times of crisis, people often panic and think it's the end of the world. This mentality can be detrimental to your financial success. The truth is, crises often present opportunities to buy undervalued assets. The best time to accumulate wealth is during a financial crisis, when others are pulling back. Having cash reserves and staying calm during such times allows you to take advantage of these opportunities. Footnote: financial crises are often the best time to acquire valuable assets, provided you remain calm and have cash reserves.